Welcome to the $1 Billion Podcast, a weekly show about the entrepreneurial journey and making it big in any industry. We're your hosts, Joe White and Kane Daniel.
Hello and welcome to the podcast. Today we have with us Scott Larter. Scott is Vice President of Data Solution Sales at Opta. Thanks for being here, Scott.
Thanks, Kane. Thanks for having me.
Yeah, so Scott has a really diverse work experience across various industries and different roles. I'm going to let Scott get into that more. But he's been in the industry for many, many years, mostly with data and data sales. But Scott, I'd love to hear from you if you can, in your own words. Let us know sort of your story.
Sure. Well, again, thanks for having me, Kane. Appreciate it. My job today is to sell property data, risk analytics, and AVMs into the marketplace. So if you don't know what an AVM is, it's a data-driven valuation model that predicts the current market value of a home. So when you think about other offerings in the market, if you're more familiar with Zillow, they have the Zestimate. House Sigma has their AVM. Typically, AVMs have been used to generate leads for real estate agents, but it's also used quite a bit in the lending community. So my job as VP of Business Development or Data Sales across country is to sell property data and analytics to the lending community, and that could be a mortgage broker, that could be a lender, it could be an appraiser, it could be a fintech, a digital real estate offering, but also the insurance industry. So, any insurance company where you go to get home insurance, they leverage our data as well. So, as a business development focused person, my job is to go and find new revenue in the market, as well as continue to build out those relationships and, even build products along the way. So if feedback from someone says we need this, then, we do what we can to try and deliver that. So
now we're going to get into, Scott, a little bit more about you, because I think you have some really cool stories. But just before we do that, you touched on AVM, and I'm wondering if you can maybe just explain for those that don't know, maybe considering coming into the mortgage broker space, what that is and how it relates to, or how it might help brokers, and so specifically for the AVM.
Sure. Traditionally, the mortgage broker world relied a lot on the homeowner providing the broker with information on their home. And that could be anything from year built to square footage to bedrooms and bathrooms, lot size. There's all these sorts of questions that lenders need to know or need to have on the mortgage application. And another piece that's always been crucial is the declared value, or, brokers often ask, what's your house worth? So if you're trying to lend money to somebody and you're trying to pull it out of the equity of their home or whatever that might be, a question that was often asked is, how much is your house worth, homeowner? Well, homeowners, they don't always understand the market conditions, this year versus last year and where market values are. Thinking back 2 years ago, it's a very different environment back then to what it is today. So people will think, oh, well, I know my neighbor sold their house for $800,000 2 years ago, and I have a finished basement and they don't. So mine has to be worth $850,000 or $900,000. Not realizing that since that time, interest rates have gone up. I mean, there's all sorts of factors that play into that. So what an AVM does is it takes all sorts of different information like real estate activity, listing activity, property data, comparables, and it puts a market value on the home based on all that information. So in today's market, because of everything that's been going on in the neighborhood, your house is currently worth X. So again, going back to some of those other examples, like Zillow has been very popular with their Zestimate, especially in the States. House Sigma. There are other providers in the market, whether they provide the real estate community or the lending community with an idea of the current market value. But where the mortgage broker can benefit with an AVM is in that trusted advisor role that we're all taught to be in, helping coach the homeowner through what their house is actually worth. And again, every homeowner, depending on their situation and what type of money they're trying to borrow for whatever their purpose, could be medical bills, but it could be to finish their basement or put in a pool. Because of our ego, we all want to maximize what we think the house is worth. And I think an AVM provides the broker with the ability to coach them through that. Looking at a profile of your home, it looks like your house was built in 1986. It's 2 stories. You've got 4 bedrooms, 2.5 bathrooms with a finished basement. In today's market, your house is worth roughly $725,000. Now, the homeowner may dispute that, but what an AVM does is it gives some ammo to the broker to set the expectation with the homeowner, what their house is worth currently today, and what they can expect if an appraisal is ordered later, what will likely come back. And there's all sorts of, from an underwriting perspective, from a time to fund, from a broker experience, and brokers are always going after those Google reviews. How can I build those Google reviews? Well, a lot of it's based on experience. So if you can set the right expectation with using data and using analytics to help coach them through that property and that process, you're only going to provide them a better experience, which they're going to tell their friends and their neighbors, which is going to help build your book. And I can give a few examples around the things that we've seen in the market using AVMs, but happy to go into further detail when that's.
Yeah, we'd love to do that. And I do. I mean, we love data, and it's going to be growing and growing and growing as time goes on with technology. But I do want to know for you personally, what sort of inspired you to get into the roles that you've done, and specifically with data, because I'm not sure if a lot of little kids say, I want to be data sales when I get older. So kind of what I guess what got you into that?
It's not the sexiest of businesses, but like anything, it's what you put into it and the emotion you put into it. So I'll go way back to say that I wasn't the greatest student in high school. I struggled in a lot of, getting good grades, and wasn't a great reader. And what I mean by that is I had a tough time being focused. And later do I find out I have ADHD. So that answered a lot of questions around, I don't know if any of you out there are trying to read something and then you get done half a page and you're like, what did I just read? And you have to go back. Well, that would happen to me constantly. So, not a great academic back in high school, but I had a goal of playing golf in the US on a golf scholarship. So I focused a lot of my time on weekends and obviously in the summer here being in Canada, on getting my golf team to an area where I could take that down to the States and get a scholarship at one of the universities down there. So, with that goal in mind, I mean, life's about goals. It's about trying to achieve the things that you want. Focused a lot on golf, but scholarships to a U.S. university is also based on academics. So really had to work hard, get tutors. Didn't become a great reader, not a great reader today. So I had to find alternative ways of learning, whether that's podcasts, whether that's watching videos. There's a lot of documentaries on Netflix and various things that get, build a lot of motivation in me. But, went to university. Yeah, go ahead. Sorry.
Yeah, I think that's super important what you said there. We actually have talked to different people with various academic backgrounds. So having that, I think the importance, and I want to point this out, the importance of having a goal and having something that you're going towards, we talk about quite a bit as being super important, especially when you get into roles that are commission-based, or you really are, like you mentioned, you get out of it what you sort of put into it. So, and something else that we talk about is, and this is sort of getting into the psychology a little bit, but I'm wondering if you've had this experience that it's not always just about what you're going towards. It's also about what you're maybe running away from, or not wanting to fall into something. We all know we might have our demons in some ways, but I'm just curious if there's any thought towards that. Is that goal setting, but also sort of making sure that you're not going to fall into any trap or anything. That's the other side. That's the bad end.
Yeah, I think regardless of what industry, what job you end up doing over the years, I think you have to get up every day excited to do it. So whether you're a mortgage broker, you're in construction, you're, whatever it might be, I think, falling into a rut of getting into a business or doing something that you don't enjoy, I think is a rut in itself. So, anyone that's getting into the mortgage broker world, I'm excited for you, because I'll tell you what, the next 10 to 20 years is going to be really, really exciting. And if you set yourself up for success, and however you measure success, I think there's a ton of opportunity to achieve.
Now, Scott, from your perspective, you mentioned that you think the next 10 years, next 15 years might be super exciting. From your perspective, in your role, what is it about the next 10 years that you think is going to be maybe particularly exciting?
Yeah. Well, when you look at the current market today, so here we are sitting in February of 2024, during the pandemic, especially in the Toronto market, you saw bidding wars, you saw values of homes skyrocketing, equity building, and then we hit a market over the last little while where interest rates go up. I don't want to use the word recession, but some would suggest a recession, and market values for those that needed to sell somewhat went down, and some communities that were really popular during the pandemic came down 20-30%, which for some that bought a house for $1 million in 2020, 2021 to now know that it's only worth $700,000. A lot of us are building our retirement based on the equity that we have in our homes. So it's especially waiting in line in a bidding war to get something that may have been a little bit out of your price range. So, when you're a mortgage broker and you're looking at what the next few years especially is going to look like, CMHC reported that over 4.2 million mortgages are coming up on renewal here in the next 2 years. So that's right across the country. So when you think about these mortgages, these are people that purchased their home in a very low interest rate environment in 2019, 2020, in the pandemic, starting in the pandemic where, real estate listings went way down, but then as people thought, hey, I need more room, I'm going to move out of the city, upticks on market values, probably got into a bidding war, probably overspent. And here we are sitting in a very different interest rate environment where somebody who got a mortgage for 2%, 5-year fixed back in 2019, they're coming up on a renewal that's going to add $1,000, $1,500, $2,000 a month to their mortgage.
Yeah.
And there's a lot of folks out there that aren't going to be able to afford that. So you've got that community of folks that may have to put their house in the market, and they may have to reset, whether they're moving out of the GTA or whether they're just looking for other financing terms, because as we see in the next little while, Bank of Canada is suggesting the interest rates are going to come down. And
yeah,
I hope so myself, as I have a mortgage. I'd love to see that come down.
Probably won't be the levels that we saw before, those crazy low interest rates.
I remember buying a house. My first place was at a 5.45.
Yeah.
And I didn't even think about it. It was a relatively high 5-year fixed mortgage. I think we were spoiled, and it came down to, people were paying less than 2% on their mortgages. We built a new lifestyle based on money was cheap. And when money's cheap, you borrow.
Yeah.
And money's not as cheap anymore. So I don't know if it'll ever come back down to where we saw it a few years ago. But I do think it's going to move a few points to put it back into an acceptable range. But the other thing that makes the next few years be an interesting one is everyone that's been waiting to put their house in the market because they know they're not going to get the most amount because interest rates are too high. Those first-time home buyers that, frankly, just couldn't get in the market because market values were too high and therefore interest rates were too high. I think there is a community out there that we're starting to see. I know I've seen some articles in the Toronto area where 30, 40, 50 people are waiting in line in front of homes to do an open house.
Yeah.
So I do think the demand is coming. But in that, as a mortgage broker and as a bank, and you've got the big banks that also have mortgage offerings through brokers, but also do it direct. If you're good, it's an opportunity to grow your business significantly. But if you're asleep at the wheel, there's competitive offerings in the market that if you're not paying attention, they'll be able to scoop that up, just offering a lower interest rate and more flexible terms than we've seen in the last few years. So, my suggestion to anyone that's going into this market or that is in the market, there's a tremendous amount of opportunity to grow your business in the next 2 years. And I'm jealous for those that are just coming in, because really, to me, it seems like there's a lot more opportunity than there was for most that have been getting in the industry the last few decades. So good luck to everybody.
Your point is so well made, especially if you are, and you mentioned good, if you're good. And I think part of that also, and we talk about this a lot with those in the industry and those coming in, is about being proactive, especially to those families and those people that are, as you mentioned, maybe their mortgage is coming up for renewal and they have anxiety about it and they're not getting contact from their broker or from their lender 2 years out, right? So, but it's an opportunity there to come in and start sending them information, say, hey, listen, you'll be okay, and this is what it might look like, and getting really in there with that info and providing value, way ahead of time before there's a potential deal actually to happen. So, but I did want to touch on something else that you mentioned with technology and especially your specialty with data. I'm wondering what you think might be coming in the future, or what you may know is coming in the future, what may change, or what you can speculate a little bit, and specifically for brokers that are in that space, what can they expect, do you think, with not just with Opta, but also just generally with data and where things might go?
Well, I think anyone that has a CRM today, take the time now to make sure that CRM is up to date, that it has clean data in there, and all the various fields that are collected. Because whether your book is 10 or 500 or 30,000 customers, you got to keep up to date somehow with all of them. And, traditionally, a CRM tool, whether in the real estate world or in the lending community, once in a while you get a happy birthday email that comes out because they have your birthday in there. I think where technology and data are going, and we've already seen a lot of this in the States, where using tools like credit and using tools like home values are becoming lead generation and retention tools. So in Canada, I think 3 or 4 years ago, the offerings like Credit Karma and Borrowell have come out, where every month you're sent your updated credit score, which typically, if you ever wanted to get that, you'd have to go to a TransUnion or an Equifax and pay $30, $40 for a credit report, whether you just wanted to know where your credit was or you needed it because you were applying to rent a property or whatever it might be. So the model being flipped into a world where, a broker, in this case, Credit Karma and Borrowell, are funded by the credit card companies and the mortgage lenders, where they're obviously using the credit score as the ability to target for offerings for your credit. So if you have really good credit, there's things that are tailored to you. If you have really bad credit, there are things that are tailored to you as well. So as you sign up for Credit Karma and become part of that offering on a monthly basis, they're sending you an updated credit score, but also all those credit card companies that want to target people with whatever credit score of 700 to 750, they're hitting you with offers, which isn't much off what YouTube does. You watch videos, and if you don't subscribe to the premium product, you're getting ads and things like that. So, we're starting to see things that have been in use in the States over the last little while, where instead of a credit score, it's a home value. And I did a survey, I want to say about a year ago, where I sent out a survey on all my social networks, so whether it was Instagram, Facebook, and I think I put it up on LinkedIn as well. And I just put a survey out there, and I said, if you were to get a monthly update, your updated credit score or an accurate value on your home, which would you prefer? And 89% of the people that responded to said an updated value on their home. So whether they felt that that wasn't an offering currently in the market, or because they've already been getting credit scores through these offerings over time, that was something that was really exciting to them. So, from a data perspective, especially on the property side, Opta, we know nothing about the homeowner. We don't want to know anything about the homeowner. I don't want to know your credit score or anything along those lines, but we know everything about the property. So that could be anything from year built, square footage, bedrooms, bathrooms, lot size, water source, sewer source. We know if you've pulled permits. We know if you've rented out your property. We know if you have a commercial business registered to your property. These are all things that isn't considered PII. This is information that can be aggregated and available at an address level. So where I think I see technology going and I see data going is, instead of that updated credit score on a monthly basis, provide an updated market value. And the key here is accurate. There are offerings in the marketplace that do provide, for lead purposes, a market value on your home, but oftentimes it's too high and too low. And when you think about those two scenarios, if the property value in your home is too high, and you reach out to that real estate agent, mortgage broker, whoever it is that's using it as, your expectation now is that your house is worth that. And if you were to sell it, or if you were to get a home equity line of credit, that's the value that it would be at. And the other scenario is if it's too low. And if you put in your address and outspits a value that's too low, you'd be like, oh, they don't know what they're talking about. I'm not interested in this. I'm going to move on to the next one type thing. So the key here is accuracy. So the traditional AVMs that have been built over the years have typically focused on the real estate community, focused on generating leads for real estate agents. That's how Zillow very quickly became a multi-billion-dollar company. Was you put in your address and they spit out a value and they would sell that lead to a real estate agent. But again, that's somebody going to another platform and then them selling you a lead. I think, as we all, mortgage brokers, whether you're an M3 broker, a DLC broker, you've got all, these parent companies. You've also got your own brand, which, could be ABC brokerage, but or whatever that might be. It's about driving value for yourself. So one of the things that we're seeing is that the same data and analytics that is being used by appraisers, appraisal management companies and lenders to underwrite loans are becoming available to the broker for lead purposes and retention purposes as well. So if you're a broker who has 500 people in your book or 5 in your book, one of the ways that I think is, that I'm focused on and I'm having many conversations about currently is, if you send an accurate home value to them on a monthly basis, at least one time a month, they're going to log in to see what their new home values are. So if you've got that engagement on a monthly basis, you can use that. And going back to your earlier point, how do you keep them updated on the market? How do you update them on events? Real estate agents and brokerages have been great at, like, Santa Claus, come and get your picture taken with Santa Claus and bring your friends and things like that. So, unless you're seeing the flyer or the poster in your community to know that, how are you getting these value-added services and offerings out to word of mouth, build your brand? And again, these are usually about bring your friends. So you, my customer, come bring your kids to sit on Santa's knee and get a picture, but bring a few friends too, because obviously they want to engage in that brand as well. So with technology and data, it's a very hands-off way of doing things, that where if your CRM is up to date and you have their email address and you have their accurate home address and you have a value of what they recently purchased their house for, or a recent appraisal, or even the various AVMs that are in the market, including our own, it's very easy for you to tell them what their house is worth today and then have them come back every month for an update. And, that to me is the future of the Canadian brokerage world, is how do we avoid a customer going, to the easier offerings out there that may have way more spend from an SEO, Google perspective. They're showing up higher on the lists. How do we stop them for typing in mortgage rates? How do we keep them coming back to us? And it's by getting creative with the assets and data you already have on these customers and using that data in a ethical way. That's a big one, to keep them coming back and trying to learn from you and not from the next, shiny offering that's available online. So.
Yeah, Scott, this is such important information that you just put out there. And it sounds like what you're saying is just to summarize a little bit, we're able to, with technology, with big data, automate really what becomes a personal process. So you're able to personally handle in an automated fashion your clients and your prospects. And you can keep doing the Santa Claus stuff and the hockey rink and whatever else you're doing in the community, right? Because I think that's also important to have that. But then on the back end, also automate using technology and still make that a personalized experience. And I'm wondering, one thing you said about I'm having a good evaluation. I'm wondering if maybe you could just give a brief overview of how these evaluation models worked in the very early days, and then how they've grown with data, and maybe, for example, Opta, who does have a ton of data, what you're doing versus some of the smaller ones. Because I go on these websites and I look at my home and I do it on several different ones to get an idea of sort of what the variance is. And I'm wondering sort of maybe what they're using versus what the technology like Opta might be using, and how it's creating a particularly accurate evaluation.
Yeah, that's a sensitive topic. It's one that I can't comment too much on. I don't know if I'll be able to provide a good answer for the podcast on that. I'm just trying to think how I could come about it.
Yeah, no worries. If we can brush over that one. I guess the question is not necessarily anything proprietary or anything that's like diluting another brand, but I'm just wondering maybe at a high level, how were evaluations being done? I know a lot of it was comparables or is comparables.
Yeah, no, right? I can talk to the evolution of how this. Okay, so when you look back traditionally, and we've probably all had one on this podcast if you've owned a home. It would rely heavily on a full appraisal. So what a full appraisal is a certified appraiser would get the order from a bank or from an appraisal management company. And for those of you, the nationwide appraisal services or Solidify or First Canadian Title, there's a number of them out there that banks partner with. You as a homeowner go in for a loan, whether it's a HELOC or whatever it might be. The bank wants to ensure that the value on the home does not over how much you are trying to borrow, and as well as it doesn't exceed their risk tolerances. For example, an 80% loan to value. So that means that the bank owns 80% of the home. If you're trying to borrow where the bank now all of a sudden owns 90% of the home, that's not the environment they're trying to create. That would be something that they likely wouldn't lend on, depending on the lender. They may or may not, depending on the backers. But what an appraiser does is they get the order, which is the address. They may have a few data providers that they use. There's tax assessment organizations out there. There's companies like Opta that aggregate data. There's a number of data providers across the country, and in some cases, the appraiser is also a real estate agent. So the real estate agent has access to the real estate board data, which they can go and look for comps and different things along those lines. So, it's a little bit of work before they go and take the order. And I've never been an appraiser. I'm guessing and just basing it on conversations I've had. But they would have to then go to the home. They're going to take pictures. They're going to measure out the home. They're going to count bedrooms and bathrooms. They're going to look at the quality of fixtures in the home. Anything from hardwood versus, lower grade flooring options. They're going to look at, square footage. They're going to look at lot size. Do you have a pool? They're gathering information as they go. And that used to take a lot of time. It would take an hour, sometimes 2 hours, depending on the size of home. And they'll do that for a couple of homes for orders throughout the day. So once that day is done, they go home to their computer and they start doing research. And based on all of those notes that they've taken, they try and look at sales history that's been going on around the neighborhood over the last 2, 3, 4 months. Typically, they like sales that have occurred, within the last few weeks. But in a market like now, where the real estate activity is quite low, they're having to look further back and further out from a radius perspective to find comparables. And they'll put a report together. And that report will have all the information on the home. It will have the comparable properties that they picked, and then some factors that played in. Maybe yours has a pool, but the other comps didn't. Maybe you back onto water or to a ravine, and the other comps that they used didn't. So they'll add some percentages and factors in there, and then they'll spit out a number to say, we feel based on everything we know that your house is worth X amount. So when you think about that process, that's a lot of research. That is them having to drive. It may be downtown Toronto, but it may also be in the middle of nowhere, 2 hours from them that they have to go to, and in a more remote location. So there is a time element to that as well. And don't get me wrong, I'm not suggesting right now that there isn't a time and place for appraisals. They will always be needed forever.
I was just going to ask you that. Yeah.
World. But as things progress, as data becomes more available, as data becomes more accurate and reliable, as well as risk tolerances in the lending community, as they kind of adjust what they're willing to be a little riskier on, this is where AVMs became an alternative. And again, what an AVM does is all those things that I just said about an appraiser, it's doing that by just looking at the data. Let's look at other homes that have a 2022 year built that are 1,500 square feet, that are within 2 kilometers of this home, that are 2-story. And it's able to look at not just 5 or 6 or 7 comps. It can look at all the comps within that criteria. And based on all of that, spit out a number that is based on all of that information and do that like that. So as a lender, are you comfortable with that? Are you comfortable taking something that a person has traditionally done and allowed a robot to essentially do that, or AI or machine learning, or all the buzzwords that you hear in the market? So my feeling is that as AVMs have become more and more available across the country, you typically see the top performing AVMs, they're within 15% of the actual sale price on a home, 80 to 85% of the time.
Wow.
Which is strong.
Yeah.
It's, again, with an appraiser, you're still relying on them to make a decision based on everything they know. So they're putting in a value based on their experience and based on the data that they have access to, which is the exact same thing an AVM does. But what an appraiser has is the insurance through the AIC or scenario. So they have E&O insurance that if that value is incorrect and the bank, the homeowner defaults on their mortgage and the bank has to sell that home, if that home ends up being worth more than what they lent out on, that's an opportunity for them to claim. And because an appraiser has insurance, that insurance will back that.
Yeah.
AVMs, until just the last few years, have been an uninsured product. So, it's been various use cases. We talked about lead generation and retention, but it's also been looked at as an alternative to the appraisal. So there are offerings in the market, like First Canadian Title as an example. They're an insurance company. They insure title. They made available an insured AVM, and essentially it's the same thing. It's providing an insurance policy on the value of the property. So when you look at those 2 products, if you're getting an appraisal order, it's the availability of the appraiser. It's how much time it takes them to do it. They have to travel there, then they have to do the research. And that could take a day. That could take, we saw weeks in some of the higher volume. It really depends on when the appraiser can get there and how quickly they can do it. The IAVM, if it's eligible, and it's an instant approval. So it happens like that. So as a lender, that is costs less, it takes less time. It's an insurance product that backs it. So they're really getting the same thing that they do with an appraisal, but it's just based on data. So there's a lot of things that go into the eligibility of an insured AVM, and that could mean how good the AVM provider is that's available in that location. That could be credit score of the homeowner. That could be loan to value. That could be accuracy of data that's submitted to the offering to make, because if anything's inaccurate, they'll just automatically say it's ineligible and they'll move to a full or another alternative product. So very quickly did you see it go from full appraisals to insured AVMs.
Yeah.
But there was a gap there. There was a gap where we still wanted to make sure there was somebody's eyes on it. And that's when you started to see desktop appraisal solutions. And what that is all of the data gets generated on behalf of the appraiser. So here's all the data on the property. Here's the AVM on the property. Here's the comparables on the property and other things that play into factor. And then it's really up to the appraiser to make a decision that is that AVM accurate based on all of the information. It's not the appraiser coming up with a value. It's the appraiser looking at that value and saying, yeah, that looks good to me. And then they sign off on it. Yeah. So that's a 4-hour SLA. So now you've got full appraisal, which takes as long as it does. Not suggesting it takes long. Depends on the market, depends on a few factors. The desktop appraisal that once it's submitted, it's a 4-hour SLA. And then an IAVM, as long as it's eligible, it's an instant process. And as a broker, you probably have an insured AVM in mind because you want to make sure that deal's done as quickly as possible and with the least amount of hiccups. Makes you look good. It makes the homeowner feel great that you were able to solve their need quickly. Because again, it could be somebody putting in a pool, could be medical bills, could be putting their kid in university. We don't know a lot of the time where that money's going to go, but everybody seems to have that similar urgency. And there's steps in the process you as a broker can learn to make that insured AVM or desktop appraisal show up more often than having to rely on full appraisal. So
now these types of things, Scott, these types of technologies, it sounds like it's a risk for, appraisers out there that it obviously is. Technology changes, things come in. Now on the broker side, for the same thought there, the technology coming in and there is a concern, I think, in the community sometimes is, what will this technology do? What will this big data do to my role as a mortgage broker? And so I'd love to hear your thoughts on that. And just to add in there, something that I guess one of the differences there between, for example, an appraiser and a mortgage broker is also dealing directly with the client almost all the time. So, I'm interested to hear your thoughts if you feel there is a threat to mortgage brokers in the future with different technologies, and if so, what that might look like, or if not, why?
No, I think looking at homeowners and potential customers to mortgage brokers, there's different folks that like to deal with things in different ways. And, whether that's people that don't like to pick up the phone and they only want to text, and we see a lot of that in the younger generation. A lot of homeowners want options and they want to make sure that they know they're getting the best rate. So a mortgage broker gives them the ability to see a number of different options in the market. There's others that are comfortable with dealing with their bank because they've had the same bank since they were 15 years old and they want everything to show up on the same online account. So I think, not one offering is ever going to solve, everything that every customer out there is looking for. But I do think from people that approach mortgage brokers, they want that dialogue. They want that trusted advisor. They want somebody that's going to walk through that process as their coach and their advocate. When you sit down and you go through your goals of what you're trying to achieve, they're going to have those goals in mind from start to finish. So my take on the job of a mortgage broker is trying to fulfill that need and that goal. That should be the mission, and doing that in the best way possible. And whether that's through technology, whether that's through dialogue, whether that's how quickly you respond to them when they text you or call you, that becomes your brand. And, And that's what resonates, and that's what ends up on Google reviews, and that's what ends up being told to their friends down the street that are looking for something. And of course, you'll be referred to. But technology out there today will replace a lot of the due diligence and a lot of the time that it takes a broker away from being face to face with their current customers and prospects and leads.
That's such another important point that you made there, is that if you're a mortgage broker and you think about what your highest and best use is probably not crunching data. It should be as marketing, sales, relationships, being with your clients. And so you want
meeting with your local real estate agent, expanding your center of influence, going and talking to builders about how you guys can partner on being the financing recommendation. That's building a business. Sitting in front of a computer and crunching numbers and trying to find data and going back to homes. If somebody bought a house 2 weeks ago, you're going to find information on that house because of a recent listing or whatever it might be, depending on where you access your data. But if a home hasn't been on the market for 30 years, that takes a half an hour, and a lot of the time you're guessing based on what you see in a Google Street View image and what the homeowner knows. Homeowner doesn't often know. I would say over 90% of the time, the homeowner doesn't know the actual year built to their house or the actual square footage. Yeah. Like in British Columbia, if you have a walkout basement, the square footage of the basement is included in living space. That doesn't happen in Ontario. In BC, you could have a one-story home on a hill, and in the back, there's 3 stories in the back. What do you think that is, a 1-story or a 3-story?
It sounds like but it sounds like that square footage counts, right? In BC is what you're saying.
So there's rules that are in play, whether it's an insurance company that needs to know this, or there's some standards that are met provincially, that if you don't know these things, again, you are putting data that's incorrect into a mortgage application that the underwriter is receiving and going, this isn't right. Then they email you back. Your file goes to the bottom of the pile because they need information. So the ability to be able to put that application and research together quickly, effectively, and to provide the best customer experience possible, accurately is key. Yeah. And where we've seen the trend in the last few years is we've integrated into a few of the POS systems here in the market. So I'll bring up Newton Velocity as an example.
Now, do you want to explain what that is, the POS system, for those that maybe don't know?
POS is a point of sale that's used by mortgage brokers across the country, and there's a number of them. The one that's been around for the longest is Filogix Expert in the Canadian marketplace, anyway. There's others out there like Newton Velocity, which was built by DLC, but it's open to other brokers outside of the DLC umbrella. M3 has Mortgage Boss. Lendesk came out a few years ago with their offering, and then they bought Finmo. So there's a number of them that are used across the country for different reasons. But what they all do is they give you a system that allows you to put together your file, put together your application, and submit it to the various banks that are integrated into that POS. One of the themes that we've seen now that we've been involved with is integrating into these POSs to pre-fill the mortgage application on behalf of the mortgage broker. So instead of asking the homeowner, when was your house built, all those things, you're able to walk them through their biggest asset by simply typing in the address and having all that information readily available right in front of you, including a market value.
That's so valuable, Scott, because what that's do is I think a lot of people don't actually think about this when they come into the space, that as a mortgage broker, you actually you have 2 clients, right? You have your lender that you're submitting to, and you're actually recommending that deal. You're recommending it to them. So you should have gone through the work to understand their product, to understand why it's suitable for them. And then, of course, on the other side, you have your client, right? The borrower. So being able to do that automatically actually removes a couple things. It removes friction for the client having to figure out that information, and then also provides that accurate and reliable data and information going to the lender. So very, very valuable.
And to bring that back, Kane, is, over time when, technology and data wasn't readily available, a lot of these mortgage applications would have those fields that were required. that you require a year built, you require an accurate square footage. But if the mortgage broker didn't have that information and either didn't ask the homeowner, who often again doesn't know the real thing, they would just put anything. They would put an asterisk to get by that field so they could move on. Another one is like a proper postal code. If you put an incorrect postal code into an application, that's minutes in the underwriting, because they're sending that right back. The underwriter's sending it right back to the broker saying incomplete. It also eliminates eligibility for, remember those appraisal options you had, full, desktop, AVM? If the data on the addressing is incorrect, ineligible, right to a full appraisal. So, as we start to track the efficiencies through the underwriting process, all of these things are extremely important. So if you are able to put an accurate address on a mortgage application, and by the way, the most popular postal code used in the Canadian lending world is HOH. I don't know why that's used. It can't provide any value to anybody, but they know that it's a 6-digit postal code that they know, and they put it in there. And I'm not sure if it's used more around Christmas time or not, but the point of the matter is the data that you're putting in there is the data that's going to flow through your entire application process and right into the valuation. If it's wrong, you're going to go to full appraisal every time. And depending on if you ask the homeowner to pay for the appraisal or you as the broker, sometimes are going to offer to pay for it depending on the type of customer they are.
Yep.
That's $500, $600, $700, $800.
Yeah. And then you start building a brand
just by putting the right address.
And then what you start doing is you start building a brand for yourself and your brokerage that you're providing inaccurate, incorrect information. And, as you wouldn't do, those underwriters and lenders are not going to like that, those types of files coming through. So Scott, before we wrap up though, I just want to know one more thing, and just to circle back to the start of the conversation, I'm wondering when you got started, especially if you had anyone or even throughout your career that was a mentor for you, that helped you through your career. And if so, I guess, how did that work? And was that, looking back on it now, how important was that for you?
Oh, great question. And for anyone out there that doesn't believe in the mentorship, it's extremely valuable because, hopefully if you get a mentor, you're getting somebody that's been in your shoes before, and they're going to help you understand the speed bumps. I had a mentor. I've had various mentors over my career. One starting with my dad, and everybody. I mean, my dad was a great mentor as a business owner, as well as he ran an advertising agency and was in sales his whole life. So I was able to live through that, and I learned hard work. I learned ethics and relationship building, and that whole trusted advisor piece, which do the right thing and be there for your customers, and it'll benefit both you and them in the end. But as I got further into business, I started my quote unquote corporate sales world, working for Rogers, the telecom company, selling BlackBerries when BlackBerry first came out. And I was lucky because my next door neighbor at the time was the executive vice president in charge of all things sales and customer service for all of Rogers, a gentleman by the name of Jim Lovey. And Jim was great, awesome guy. And, he was at a level in his career that I wanted to be. I wanted to be a high ranking sales executive, whether that was a small brand or a big brand, that really didn't matter. But we were very similar in personality and just the way we looked at things. So, I was able to have a number of sessions with him where we were able to sit down. And I remember very early in the process, he goes, well, what are you good at and what aren't you good at? And as a hot-headed, mid-20s,
good at everything,
happy sales guy, you automatically say, well, I'm just the best at everything. No, I didn't think that. But, that's a very difficult thing to do. So an exercise that was extremely humbling to me that he put me through is he said, I want you to pick 10 people And I want you, and these 10 people can't be anyone that can benefit from you. So, they're not going to give you answers that are going to make you feel good. These are, friends, these are colleagues, these are your spouse. That's a hard one.
Yeah.
But, what you want to do, it's a pretty simple task, is ask them, what are the things that I'm good at? And what are the things that I'm not good at? And make it quite clear that you're trying to grow as an individual. So, open forum, talk about whatever it is that you feel I need to know. But whether it's good or whether it's bad, please provide an example. So, if you're good at something, okay, can you give me an example of when you saw that? And if there's things that you need to work on, the same thing. And I think until you know what you're good at, you don't know what to continue doing or working on even more so you get better at it. And until you know what you're not good at, you don't know what to improve. And, I look at the things that I was taught that I didn't know much about myself. And, one of those things is I have a very dry sense of humor. And, oftentimes I wouldn't read the room well. And, I would tell a joke and I would just keep a straight face. They wouldn't know that I was actually telling a joke. And, sometimes that can come across. And in sales, you're trying to figure out, how do I make everybody comfortable?
Yeah.
How do I make sure I focus on that person as much as that person? But I wasn't aware of the fact that sometimes I would just not read the room well. And, that was a speed bump for me that I had to work on. And it's still something that I have to work on today is understanding that, who your audience is and the things that you can, I don't want to say get away with, but things that you need to focus on versus the ones that, maybe you leave to your friends sitting at a bar versus doing in a corporate environment. And
I really love that. Finding people that you can trust, 10 people, if it's 5 people, whatever it is, and getting that information, really illustrating to them that this is real for you and you actually want those critiques and it's super important. And you probably find out a lot of stuff that you never would have thought of, like you mentioned,
and
right?
You got to be at the right, and because egos and how sensitive we can all be, you got to make sure you're ready to listen and write it down. And, you'll see themes. So in those 10 people, you'll see themes of things you're good at. You'll see themes that, and pick those top 3 themes from each to focus on. And, however it is that you work, write things down or whatever it is. My dad always said, on the back of your door, put your goals. So every time you close your door for your office, you can see it and you know what you're doing. But improving things and, and focusing on the things that you're good at should be goals that are just as up there as much as making money and success and being a great family man and dad and spouse and all those goals that we make in January and measure ourselves at on December 31st. Improvement of what you do is another one of those goals.
I love that so much, and especially for the mentoring part where we started with that conversation, is that I think some people also miss, and this is something we've discovered here at Remick, is that working with different people in the industry that have done very well, is they actually want to do that. They want to give back, so to speak. They, finding someone, especially maybe someone that's new or someone that's younger, to actually help guide them in this very, very rewarding for them as well.
Purpose, right? It gives them more purpose. And my suggestion is, pick somebody who is in the last 5 to 10 years of their career. They've done similar things that you're trying to achieve, maybe a similar personality. You probably know who those mentors are already in your life that you want to focus on. But they're going to be eager to help. They're going to be eager to point you in the right direction. And I'll tell you, they're going to help you be successful because there's almost an ego thing to them as well. So they may introduce you to people that you wouldn't have otherwise been introduced to. They would share stories of things that help them in the same situation that you're in. It puts another context to it, but they've been there. They've lived it. They've seen it. They know that when things are bad, it's short term, but they know that when things are good, it's short term. So, they'll keep you in that constant, and then you can just focus on improving and focus on achieving the things that you're trying to achieve.
Such good advice, Scott. And thank you so much for being a part of this. There's a lot of great information that you gave, and we'll definitely have you come back on and we'll talk more about the motivation part. I love that. Thank you.
Sure. No problem.
Thanks for tuning in to the $1 Billion Podcast. Make sure to subscribe to the show so you never miss an episode.
For more in-depth entrepreneurial insights, follow us on social media, and for more info on the show, go to billiondollarpodcast.com.
See you next time.